Morning, Steve Free in Chicago with the morning grain comments. Well, I'm still checking the naughty and nice list, but at least I'm bringing down the naughty list a little bit. A lot going on in Washington, D.C. Doesn't really have, I think, impact on the markets yet, so we'll kind of see how things move along. The House passed the United States, Mexico, Canada legislation yesterday. It should go to the Senate, but they probably won't address it until after the first of the year. And then we'll see if there's any problems with the Senate also addressing the impeachment trial. As far as overnight, beans are a little bit lower, corn about unchanged, while wheat's a little bit higher. Markets are kind of on hold right now in kind of holiday mode as we slide into the holidays next week. There is a perception that China continues to be in touch with the U.S. about the Phase 1 deal. They lowered tariffs on beans and chicken parts. They also overnight lowered tariffs on energy and manufacturing goods to help reduce the U.S. trade deficit. They're expected to announce with the signing sometime early in September. The South American weather looks good. Brazil's got normal weather, and finally it looks like southern Argentina is going to get some rains down there. Weekly export sales, we're expecting wheat sales 2 to 600,000 tons. Last week it was 500. Corn 1.2 to 2 million tons. Last week was 873. And beans 950 versus 1 million tons last week. So we're just kind of watching to see if any new sales pop up. Yesterday there was a report that China came in and bought a couple cargoes of U.S. soybeans. So we also are going to be looking at the fact that domestically here in the U.S., interior corn basis has been falling. It looks like farmers have been selling a little cash corn to pay bills and on this recent rally. The estimates for D1 corn stocks is around 11.6 billion bushels. Last year was 11.9. We're coming in with the same carry-in. The crop's a billion bushels lower, but we also expect especially export demand to be lower than a year ago. Domestically, soybean basis remains firm, expecting that D1 soybean stocks around 3.1 billion versus 3.7 last year. Again, you got a smaller crop, and the crush and especially exports are bigger than a year ago. And Central Illinois soybean basis continues to be firm over the option price and well above last year in the averages. We also noted yesterday that ethanol margins dropped pretty dramatically from the highs that we saw just a couple of weeks ago. And so the market right now, I think, is just wait on hold mode until we actually get a deal signed and China starts coming in and buying product, which should trigger funds to cover their shorts in beans, in meal, and in corn, add to their longs in wheat, and kind of test some higher end of the levels of the marketplace. Assuming this is kind of like a 1 or 2 year deal, no South American or U.S. weather problem in 2020, those prices should be a good sale. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.